In this video, I'll discuss Q4 FY25 result and Concall of Yatharth Hospital. So, Yatharth is a multi-speciality hospital mainly present in Delhi NCR and Noida region. They have total of 5 hospitals in that region, and they are also looking to add 2 more hospitals in Q1 FY26. Okay, and they are mainly specialized in oncology and cardiology. So that is the company overview of Yatharth. So let's talk about the result of Q4 FY25. In Q4 FY25, their revenue grew by 30% year on year to 232 crore. Okay, and if we look at their past also, they grew their revenue at 30% kind of a range. Okay, for last 2 years if we see, so they are consistently doing 30% year on year growth. So that is a really good thing, and the management also expect same kind of growth to be continue in the future also. So that is also a good thing, that the revenue will grow by 30% in the future also for next 1 year 2 years. And if I talk about the hospital wise growth, the Noida extension grew by 50% in FY25, and Noida extension contributes the highest amount of revenue in their whole company of 37%. So that is also a good thing, that a hospital which contributes the most in the revenue is growing about 50%. So that is really a good thing. And the newer hospital like Jhansi Orcha, that is also grew by 70% in FY25. Okay, and this hospital contributes 7% to their revenue. So that is also a good thing. Only concerning thing is about the Noida hospital, that Noida hospital grew year on year in FY25 by 2%, and that this hospital contributes 20% to the whole revenue. So that is a concerning thing, that how that the revenue grew by 2%. We have to track that in the next quarter where it will go. So as a whole the company is doing all right, but there can be some ups and downs in some region and all. So that is the thing. In terms of volume, IPD volume grew by 50% year on year in this quarter. So that is a really good kind of a growth, that IPD volume grew 50%. Okay, in terms of IPD revenue growth, revenue grew by 32% in this quarter. So in terms of volume it is really good. In terms of revenue also it is good enough. If I talk about the OPD volume grew by 31% in this 32% in this quarter, and revenue from OPD grew by 17% in this quarter. Okay, so the revenue growth is good enough in terms of if we talk about the IPD. And let's talk about the bed numbers. Okay, they have 1605 operational bed in the Q4 FY25, and if I talk about the expansion, they are looking to add 700 more bed in next quarter, in quarter 1 FY26. Okay, so those 700 beds are from the newest hospital, which is Faridabad and in New Delhi. Okay, so that is the thing. They are consistently adding beds. If we talk about their plan for FY28 also, in Q1 FY26 they will add 700 beds into hospital, and then up to FY28 maybe they will they will add another 450 beds within like Q2 FY27, and then another one greenfield project will be there, and in that project they will add 200 to 300 beds. Okay, so in terms of bed addition target, they will have 3,000 bed by FY28, and if we talk about the CAGR growth, that is 24% CAGR in terms of bed number increase. So that is also a really good thing, that bed number will grow by 24-25% in next 3 years. And if we calculate, if bed number grow by 25%, they can easily grew their revenue by 30%, because the ARPOB also will grow in the future. Occupancy number also increase in the future. If we talk about the occupancy number, in this quarter occupancy number is at 61%, so there is a fair enough space to cover the occupancy. He can go up to 80-85% in those kind of area in the national capital. Okay, so that is a really good thing, that occupancy number is still in a low territory, and it is going up quarter on quarter. Okay, so in the last quarter occupancy rate was 60%. This quarter it is 61%, and Q4 FY24 it was 57%. So occupancy number is going up. ARPOB, average rate per available bed, that is also growing up. In this quarter ARPOB grew by 7% year on year. So in terms of that also, it is doing really good in terms of the growth. Okay, and if we see 25% of bed increase, and ARPOB of like ARPOB will grow about 7 to 10%. So we can absolutely, if we calculate, that is coming out to be 30 to 35%. So yeah, it is really good in terms of the future. And they are saying that in the new hospitals like the New Delhi hospital and the Faridabad hospital, the high-end super specialty treatments will be more. That will be around 60 to 70% in those new hospitals. So that is another really good thing. By doing this kind of high-end treatments, they can increase their margin also. So that is the thing they are saying. And another thing that is really good for Yatharth is the talent acquisition, because if we see their location of their hospitals, those are really close. If we see, there is Noida extension, Greater Noida. I mean, then in a little very small region, they have 3-2 kind of a hospital. So the acquisition of talent becomes very less. Cost of acquisition of talent become very less, because if they hire a doctor in Noida or in Noida extension, they can hire that doctor for Greater Noida also, and the doctors are also interested to join more and more hospital within the Yatharth. And the management is also saying that the doctors are applying for joining in our new hospital. So that is also a good thing, that let's say if they have one hospital in Noida, one hospital in Faridabad, one hospital in Jhansi, so they have to hire different doctors for their 3 hospital. But as their hospital is in a cluster, in a very small distance, like 20 30 kilometer distance between those hospitals. So they can hire their old doctors, their vintage doctors in the new hospitals also. So that is a thing Yatharth is doing, and they are also saying that in next I mean in next 3-4 years they will only grow in the region of Delhi NCR and Noida. After that only they will go outside that region, because in Delhi, as they have like 5-7 kind of hospitals, they have a brand value there. They do not have to build a brand there. The brand value is already there, but if they go to Mumbai and open a hospital, they have to build the brand value from scratches. So that is the thing the management is saying, that they will not go outside of this region for next 3-4 years. After 3-4 years, they may look for the outside of this region. Okay, so that is the thing the management is saying. And if we talk about the EBITDA margin for this quarter, they have done a EBITDA margin of 24%. Yeah, obviously year on year decreased by 150 bps, but the management is saying that EBITDA margin going forward will be stable in this area, like it will be around 24 to 25% going forward also for next 2 years. So that is a thing management is confident about EBITDA margin. The guidance is very good that EBITDA margin will be in this region of 24 to 25%. In terms of PAT, in this quarter PAT did not grow much. They registered a PAT of 387%, grew by only 1% year on year, but quarter on quarter they grew by 27%. I think if we see their P&L statement, that is mainly because of the tax benefit they got in the last year. That is the point there. Okay, so that is the thing with PAT. But if we talk about the PAT margin is around 17% in this quarter, and the management is saying that PAT margin will be here in the range of 16 to 17% going forward. So what we can say, that PAT growth in the future will be around 25 to 30%, as the margin will be in a similar range. So that is the thing that the management is saying, that in the future there will be a good kind of PAT growth. Okay, so that is the point with PAT margin and PAT. In terms of working capital, what Yatharth is doing, that they have like 35% government business earlier, but in the new hospitals they are decreasing the government business to around 20%. So in the government business, we all know the receivables are very high, receivable days are very high. So Yatharth management is saying that as they are bringing down the government percentage to 20% only in the new hospitals, that is why they will have a better working capital cycle in next 2 to 3 years, and they are expecting a working capital cycle of 80 days by FY27 or FY28, versus today in FY25 the working capital cycle is at 120 days. So it will improve by around 40 days in next 2 to 3 years. So that is also a really good thing in terms of the working capital cycle. Okay, and in the last I will talk about the valuations. If we look at their valuation, that is around 40x PE. So we are getting a 30% growth rate engine at a 40x PE, whereas if I look outside, like Max is growing about 30%, 35%, and they are getting a PE of 100x, more than 100x. Apollo, if we see, they are growing about 15% and they are getting a PE of 60-70x. So yeah, in Yatharth we can say there is a good chance of rating. So let's see what happens in terms of rating. But yeah, again, Yatharth is doing good. Most of their parameters are going in a right direction. We have to track the PAT number because they are expanding too much, too fast. There can be a pressure in the bottom line, and that is okay. If a company can grow, we can and we should be okay with the PAT if the PAT do not grow too much. But yeah, it's okay. The most of the parameter, if we see in terms of the expansion, in terms of the revenue also, those all things are going in a right direction. Okay, so that is the most important thing. We have to track that business, track these businesses quarter on quarter. Every quarter we have to track these businesses, and let's see what happens in the next quarter also. So that's it for the video. Thanks for watching.